What's going on, everybody? And we are live. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. Today is December 10th. This is a late episode of Trade with Travis. Actually end up having to be able to handle something in the morning, so wanted to make sure I end up doing something today, being able to go through a recap. So here we go. Let's go to the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, showing myself onto the screen. Hopefully everybody's doing very well this morning. I hope everybody's doing well this afternoon. For us being able to go from there. Let's see. Hope everybody's doing very well. Like I said a little bit earlier, this morning session, and actually yesterday wasn't able to necessarily go through the live session, so hopefully you end up taking what we end up saying on Monday when it came down to certain news and everything else like that to be able to help you out. Obviously, today is very important because of what's happening with Brexit, and we end up getting a lot of volatility when it came down to overall Brexit and seeing what's happening for the overall movement and the overall market area when it comes down to the pair. So we have to be able to pay attention to what's actually happening with that. As my son cries in the background. Give me one quick second. Let's see. All right, but while we're doing that, once again, for the people that have not been around us, this is Trade with Travis. What we end up doing is a 30-minute session. Basically, what we end up doing is just taking a look at the overall trading pair, see if there's any type of trading opportunity to be able to get in when it comes down to the overall market. And then after that, if there are, I'm going to go on mute real quick. Okay, so let's try that again. Like I said, each and every morning, each and every day, we end up going through a 30-minute session, taking a look at the overall trading pairs, looking, seeing what's actually happening with the market, seeing if there's something that we can be able to do for being able to get in for its actual pairs. And then after that, once we end up doing that, we actually end up taking opportunities to see if we can be able to trade it, make money together, and be able to go from there. So once again, hopefully everybody's doing very well as we go through and be able to do that. If you are interested in being able to learn how to Forex trade, but you've never Forex traded before, what you can be able to do is actually hop on to our Forex Bootcamp. Our Forex Bootcamp is coming up December 14th to December 18th. I'm actually waiting for this page to actually load up so you can be able to see it. I put it on the other screen. There it is, right there. So December 14th through the 18th at 9 p.m. to 10 p.m. what we'll end up doing is basically teaching new students and people that actually want to be able to find an edge and being able to overall trade. What you can be able to do with us is that you'll go through a 5-day progression. That 5-day progression will end up teaching you everything that you need to know when it comes down to Forex trading. Allow you to be able to get started with a free broker. Allow you to be able to get to a point to where you can be able to learn a simple yet repeatable system that you can be able to do on your phone and be able to trade 24 hours out of the day for 6 out of the 7 days of the week when it comes down to being able to trade and being able to go from there. If you're interested in being able to learn some more information from there, I'm actually going to drop a link in right now. And then after that, we'll go ahead and get started. Here it is right here. bit.ly/Believe in Yourself Bootcamp. You want to learn a little bit more information, or you just want to be able to talk to me, obviously you can send me an email or you can send me a personal message through your social media platform and be able to go from there. Just notice we are up to 45 subscribers, which is actually pretty good. We're still slowly moving when it comes down to that. Cedric, thanks for the like. I do appreciate it, like always. Hope everything's going well with you and your family. and we end up going from there. So let's take a look at the pairs. Let's see what's happening. In the overall calendar, um, once again, what's the biggest news right now? It's stimulus checks and it's Brexit. So we got a lot of volatility from the euro and the pound. Have a lot of volatility for the U.S. dollar. 2 o'clock in the morning, you're going to see a lot of movement. You're going to see a lot of movement from 8 to about 11 to see what's happening with that. We end up having a European interest rate decision. It kept it at 0%. We knew it was going to end up being that way. It was going to end up staying that way for probably for the next 2 years, just to be able to get people to go where they are. But what was very poor was that for its initial jobless claims, it ended up going up to 853,000. That was way off from the number that was expected, and the U.S. dollar actually ended up taking a hit from that overall movement. But consumer price index was actually on par when it came down to that movement. Going into Friday, remember Friday is very slow when it comes down to overall movement. Typically, we want to get in, get out, and be able to make some trades from there if we can. Then after that, we'll move forward. If it's not there, then after that, we just get away from it. We have to be able to pay attention to what's happening with that. We're going to end up having Michigan Consumer Sentiment Index. That's not necessarily something that's going to really affect the Forex market, but that would affect the currency market. That would affect the overall indices market like US 30, NAS 100, and everything else. All right. Take a look at the big three. You're not familiar with the big three. Basically, what that is, the U.S. dollar index. That is oil, and after that is gold. We end up taking a look at those pairs because it gives us very good correlation to be able to see what's happening with the overall markets. And I want everybody to pay attention to this down here at the Stochastic. And this is where experience actually comes in at. On overall trading, we end up saying that the U.S. dollar index was actually down on this overall pair. We said that this movement was going to end up going all the way down to 11,565 for this overall movement towards the weekly. But we also end up saying that this market was basically in a buy zone. So what that actually meant was that this market was going to end up hovering around this overall buy zone until it popped up to the upside. And that's exactly what has happened. It took this one little loop. Then after that, it came back up, came back down, came back up, and then after that, started to pop up when it came down to the overall movement. So, looking at what happened yesterday, we ended up having another upside move based off of overall news, possibly being able to get a deal done for us, the stimulus checks. And then, as soon as we end up finding out that it was basically not being true, after that, we end up seeing the market basically pop down to the downside. So, what are we expecting? We have a counter trend line break from right here. That's actually done move forward. It had a retest from the top side of it. The market is still expected to go down to 11,585, which is the weekly. The daily is expected to go down to 11,677. So what does that mean? Sell, sell, sell. Keep on looking at being able to sell when it comes down to U.S. dollar pairs. You will end up making out more than what you would trying to buy. Moving forward, let's take a look at oil. Oil, we've been talking about, we wanted to be able to buy up to the upside. We said that pair was going to end up going all the way up to 48.71 for its 2-hour movement. We said that it was going to end up going to $56 for its overall daily movement. Currently, right now, what we ended up seeing was the market was in this consolidation. It ended up breaking out. Then after that, it retested down here at the bottom, right around that $44 mark, which was basically the new resistance. And then after that, broke out again, retested again, and then broke out one more time. So hopefully we're expecting, because the market did not hit the buy zone but has made a sentiment change, that we're going to end up seeing some more upside movement on this overall pair. If you are not in at this particular point, I will look at 2-hour trades, look at trying to get in for a counter trend line break, and then after that being able to buy up to the top side and see if you can be able to get something out of that from this overall pair. Let's take a look at this. Let's zoom out just a little bit more for this. Remember, this market is expected long-term to go to $64 a barrel. I don't think that it's going to go to $64 a barrel over the course of the next 2 to 3 weeks. I believe that oil is going to end up going up because of certain reasons, which are more common sense things than anything else. This is still a time where people are going to end up traveling. If you're going to end up traveling, you're still going to end up needing gasoline. So that means that oil prices are going to end up going up just because of the sheer demand, which means that we should see prices start to rise and go a little bit more. So after market still moving up to the top side, we should see this pair start to move up to the upside and be able to go from there and be able to take a look at it. Let's see. Give me 1 second. Okay, and we end up going from there. Hopefully everybody understands that. Let's take a look at the 2 hour. Take a look at the 2 hour and let's see what's happening with that. Let's see if there's any type of trade that we can be able to get into. We had that huge breakout for its overall move. Market ended up getting all the way up to 46.70 for its overall move. Since then, the market has had a little bit of a retracement. What I would look for right now is let's see how this market starts reacting once it gets back into the buy zone and being able to trade from there. I will look for a counter trend line break to the upside. If you can be able to get that, then you'll be good to go. 2 hour move will be at 48.71. If you want to look in and being able to trade this, I will wait and try to see if you can get a little bit more movement to the downside, possibly a little bit more of a retest, and then after that be able to break out. For me, because I'm already in it, I'm actually up $114 based off of this move. I was up almost 170 based off of this movement right here. I will place my stop just below this overall swing low area, in this overall consolidation area, somewhere around the 44, basically $45 area. And then after that, just ride it all the way up to the 2 hour D extension, which is 48.71. If you want to be a little bit more patient, you can take it all the way up to the daily move. I think the better move on the daily move will probably end up being at the 127%, which would be at 50.95. Okay, so we have a trading pair, we have movement. We're basically in the push zone. What I would just wait for is trying to see if you can get a low price to be able to get in. Okay, so that's what oil. That also means that the Canadian dollar should be a little bit stronger. Okay, gold. What are we looking for? Long term, we're expecting that the market is going to end up eventually going up. But are we in a position to be able to look at this market go all the way up right now? Currently, right now, we're looking at it from a weekly standpoint. We look at it from a weekly standpoint, what we end up seeing with this market end up rejecting, going all the way down to the 1774 area before popping back up. This was literally at the end of November, and then after that, when December 1st actually ended up coming up, the market ended up popping up almost 100 points based off of this movement. And then subsequently, we end up having a retest towards this area right now. So we have a breakout. We had the retest. We're going up to the outer trend line right now. Currently, right now, what I expect is that this market will end up retesting this overall area again, or retesting this overall high again. And then after that, making a decision on if it's going to fall or go up. This is the slight movement of a morning star if the market was continuing to move bullish, but right now that's not it at this point in time. So I would say from a weekly perspective, that indecision candlestick means that we're probably going to see a little bit of consolidation for its overall movement, and half of that I think is stimulus talks and being able to have fear on what's happening with the coronavirus cases. So stimulus talks, being able to understand what's happening with stimulus talks, being able to understand what's happening with the vaccinations and everything else like that. Anything that is fearful is going to end up driving the market towards gold. Any good news when it comes down to stimulus checks or anything else like that is going to end up having the market move towards the U.S. dollar at this particular point. We also know that looking at the U.S. dollar index, we're expecting to be able to sell. So the market is actually going against what's actually happening. And the reason why the market is actually going against what's actually happening is because the market is a little bit overextended at this particular point in time inside of the stochastic. So this is your breakout. We're looking for a retest down here before actually starting to push back up. If the market holds the 1777 area, then that means that we'll see the market somewhat fall right around the 1800 area before starting to pop up. To me, that means that we should be looking to be able to sell for at least another 35 more points. And then after that, get very low prices to be able to buy up long term that we can be able to get from there. So that's where we're at this particular point. Now, we talked about this morning star that ended up happening. We said that we had continuation all the way up to the top side. Now, the opposite of that is a evening star. And that's what we have right now. The evening star formation actually ended up happening yesterday with a strong movement to the downside for that. So what does that mean? Typically, the next day you will end up having a retest. Our retest to the bottom was basically clarified just like with the retest to the top. So that means that we should definitely see some more movement to the downside going into tomorrow. If you're a scalper or anything else like that, for us being able to get in for this trade, I would look at being able to sell from there. All right, so what does that mean? Japanese yen pairs, you should see that the market's going to end up going down. We should see that the U.S. dollar is actually going to end up gaining a little bit of strength overall when it comes down to all these pairs. Take a look at silver real quick. What do we see with silver? Silver is going into this overall range and this upside channel that we have been looking at for a couple days now. Currently, right now, we have that same evening star type of movement right here. We had the retest end up happening yesterday. We're in the sell zone for this overall pair. What does that mean? We should be looking at being able to sell at least for the next few days. And then after that, see some further movement to be able to buy. Overall, I think that this market is going to go up to $30 per ounce long term. But right now, if we can get low prices and we can be able to sell at least short term to be able to get back into this overall area where it's at $22, I think that'll be a very good price going into the end of the beginning of Q1. Stop doing that. Come here. Say hey to everyone.
Hey everyone.
Say hey everyone.
Hey everyone.
Wave.
Wave.
There we go. Good job. Go with your mama. All right, so let's take a look at U.S. based pairs from there. What do we know? U.S. dollar index is expected to be down. We take a look at oil. We say oil is expected to be up. So U.S. Canadian dollar, we should actually be looking to be able to sell. We look at gold. We end up saying gold correlates with the Australian dollar and correlates very well with the Japanese yen. So we're seeing that that's going down. So we're going to say U.S. Japanese yen is going to end up being sideways. U.S. Australian dollar, United States dollar is going to end up being sideways to possibly end up looking to be toward the downside, whichever one is actually weaker when it comes down to this point. We look at silver. Silver doesn't necessarily have a huge correlation with any one of those pairs, but it is a metal. It is a metal, and it's always good to be able to look at that pair. All right, go back, go back, go back. All right, so U.S. based pairs. We're going to focus in on the three charts that we end up talking about. U.S. Canadian dollar, we should see that the market kept on moving to the downside, and that's exactly what ended up happening today. The market, this market is clearly bearish. It ended up hitting the weekly D extension. I took my eye off of it once it hit the weekly D extension because the weekly move is actually stronger than the daily, but the market is actually moving down towards the daily D extension at 126.80. 126.80 at this particular point. Excuse me for the noise in the background. It's about 85 pips down to the bottom. Does that necessarily mean that we should be looking at being able to trade this? Me personally, after the market ended up hitting the weekly D extension, I took my eye off on this overall pair. If you're trying to be able to get these pips right here, that means that you truly like this pair, and quite frankly, you're already in profit, and you're just trying to get as much as you can out of it. But I do see that we have a counter trend line break for the overall daily, even though the market is in the buy zone. So would I look at being able to get into this pair right now if you haven't traded it? No, I would stay away from it. U.S. Canadian dollar is considered to be bearish, but we're going to end up getting towards the D extension from the weekly and the daily. That means that we probably should see a little bit of an upside movement going into next week. But for right now, I believe that the market will move another 85 pips to the downside and then hit that position. But it's going to do it without me. U.S. Japanese yen, we end up talking about how we wanted to be able to get in on this pair and wanted to be able to sell it down to 101. But what we also end up noticing was that this market was basically in consolidation. Now, once again, we just talked about how gold and the U.S. dollar were basically going down at the same time. Because they're going down at the same time, then there's no direction. If there's no direction, then that means consolidation. And that's exactly what we're seeing on this overall chart right now. So we see that this market ended up hitting the support of 103.80, going all the way up to a resistance of right around 104.70. From there, that range has been, from this overall movement, has been about 107 pips. For this overall, at this particular point in time, the market on the 2 hours getting closer to the buy zone, and it's still moving from the support to the resistance. Does that mean that we typically trade it? No. There's two rules in consolidation. It's very important. We want to buy at support. We want to sell at resistance. Everywhere else doesn't matter. Quite frankly, right now, if you're going to end up taking a trade in this area, there's a 60% chance that you're going to end up losing your money. Reason being is because depending on where you end up getting in at, quite frankly, the market can go against you or the market can go for you, and your stop loss in both areas will probably end up getting hit depending on the actual position. So actually out of this market as well, and not going to end up trading that at this particular point in time. So we're done with that. Euro dollar, we end up talking about how we should see a little bit of upside movement from this overall pair. Long term, we expect that this market is going to go to 123 for this overall movement. We end up seeing that this market was somewhat stagnated. And then after that, took a huge move to the upside. The reason why I took a huge move to the upside was because the U.S. dollar is weak more than anything else. We can even see that the market is in the sell zone, but because it's in the sell zone, that kind of keeps you away from overall trading it. But we have a counter trend line break that happened at the 23.6 or the short position. So what does that mean? This market is going to end up moving up to possibly 122.79 to that 123 area, which is a point of control. And then after that, start to falter a little bit. But do I think that we're going to end up going to this position going into tomorrow, going into the next week? No, I just think that we're probably going to end up seeing some more consolidation. We had consolidation in this area. Right here. Just slight consolidation in this area right here. I think we're going to end up getting the same. Now, what could change this? The one thing that could change this overall could be what's going to end up happening with Brexit. If they're going to end up getting a hard no when it comes down to all of the news that's going to happen, that's going to make the pound and that's going to make the Eurozone. Actually, it'll make the Eurozone go up. It'll make the pound go down for its overall trading pairs because they've been trying to figure that out for literally a while now for us being able to go from there. Does that mean that we get in? Right now, market's in the sell zone. That means that the U.S. dollar should get stronger. Does that match up with what we end up looking at with the U.S. dollar index? No. We actually should be looking at buying instead of selling. So right now, because the market is in the sell zone, I'm going to stay away from that pair as well. And it's pretty much the same thing. You keep on looking at all these pairs. We talked about how the Australian dollar was going to end up popping up to the upside because of gold. That's exactly what ended up happening for this movement. The market is expected to go up to 77.25 for the daily D extension. Currently, the market is at 75.63. What would I look for on this overall pair? I would look for two-hour buy positions to be able to get in. To me, the stochastic doesn't matter anymore because it just came out of consolidation and broke out. So we are in a push zone at this particular point. We had this huge movement to the upside a little bit earlier today. And the range actually ended up going higher than what the overall DTR was. The DTR has been about 60 pips a day. The market actually ended up doubling that today. So looking for upside movement for us being able to buy. If we take a look at that from a 2-hour perspective, what does that mean? This market has moved up. What would I look for? I would look for a slight retracement if I'm trying to buy. Slight retracement and a counter trend line break to the upside. If we've seen that same, we got that same type of move a little bit earlier, where the market was basically in the buy zone right here, and it popped up. That's the same type of look that I'm looking for overall on this pair. All right. Let's see. Pound United States dollar, what are we looking for on this overall pair? Remember, Brexit is the biggest news when it comes down to that. Currently, right now, we're seeing consolidation from the 134 area all the way down to 128.50. So it's a 400 pip range. Currently, right now, if we end up getting any more news to the downside, any more news about Brexit and it being to the downside, I think that will outweigh anything that the U.S. dollar has when it comes down to jobs or anything else like that. So we should see more movement to the downside. What does that mean? About a 500 pip drop, if we could be able to see that actually happen. From the daily position, where are we at? We're in the stochastic no trade zone. From a consolidation area, where we're at, consolidation no trade zone. So proceed with caution if you're looking at being able to do this. I would actually end up letting Friday kind of play out and then see what's going to end up happening with the overall news on if we're going to end up getting any type of deal with the Eurozone and pound. If we do get a deal with the Eurozone and pound, the market is going to pop up to the upside. If we don't, we're going to have a strong move to the downside going into next week. So I'll pay attention to that for the overall pairs. Let's see. We're going to take a look at the indices market. We're going to do this real quick, and then after that, we'll go ahead and get out of here. First one I want to focus in on is US 30. US 30 is in a position to where it has been the stone cold champ for everything that we've been doing, aside from the XPX 500. Let me explain why. This market is bullish. It ended up breaking all-time highs to the upside, and the market is expected to go up to 32 32,520. All of these would be all-time highs for its overall movement. Since it went out of this W pattern, broke out, retest, and then started to go up, it's starting to go into this ascending triangle. Now, a ascending triangle is kind of like a roller coaster. You know how you end up getting into a roller coaster? You know how you end up getting strapped into a roller coaster, and then after that, you start going up the initial portion, so you can be able to get as high as you possibly can, and then after that, you have that little peak before it actually falls. So think about it like this: you have this high movement, then after that we start getting to that point to where we keep on cresting. Then you hit that last click when you end up hearing the roller coaster start to go down, and then you have the fall, retest, and then a fall again. Okay, so what does that mean to me at this particular point? I think that the market is going to end up falling down to support. If the market is going to end up falling down to support, the first area that I would look at is basically 28,880 or basically 28,900 for its overall position towards the downside. Stochastic, where is it? Stochastic is basically is muddled right now. The reason why it's muddled is because the market is in consolidation. So does the stochastic matter right now? Not really. What I would look for is that if I had to put my money on anything, I would look for the market to be able to drop. That means going into 2 hour plays and looking at how the market's going to end up selling. We've been trading on this consolidation for a little bit, and you can see this a lot on the 2 hour. Initially, when we were doing this earlier this week, we were buying. The reason why we were buying was because that the market was hitting all-time highs, but we can also see that we're starting to see this a little bit of selling position, and the market really trying to dwindle down for its overall movement right here for this triangle. Now, once it breaks out of this triangle to the downside and retests and then falls again, that's where you're going to end up having your strongest move. We had a breakout. We have the retest right here. I think going into Friday, we may end up seeing another breakdown for its overall position. So I had to put my money anywhere. We see basically if it breaks below 30,000, then that means that we're probably going to end up seeing a movement down to 29,800. I'll put my money on the market actually falling off and actually relieving from those highs first, then actually thinking that the market's going to push up. Okay, so going into tomorrow, I believe that the market's going to end up going bearish. We have to be able to pay attention to it after right around the 7 o'clock time, because that's when the market kind of opens up. But I still think it's going to be a little bit stagnant. The jobs report, I think, is going to end up being the reason why this market actually falls. So that's where we are on that one. XPX 500. XPX 500, what ended up happening, and we're seeing the same thing, is that this market broke all-time highs, went up to 3,700. The daily push zone area is 3,760 for its overall movement long-term. But currently right now, what we're looking at is that we're a little bit overextended. Because we're overextended at this particular point, we're going to see people look to sell more. They're going to look to buy. So we have a breakout, or basically we have a counter trend line break. We had a little bit of a retest right here, which was undecided. And at this particular point, two things can really happen in this market. One, we can see a strong push to the upside and make a morning star, and we keep on moving up toward the push zone because we're actually in this overall area where it will be considered a R3 zone. Or we can see this market start to really fall and then fall back down to, I would say fall back down to the overall past resistance turn future support first at 35.80, or fall all the way down to the 50-day moving average, which is basically 30,469. So currently right now, what am I banking on? Market's in the sell zone. We have a counter trend line break. I would look to be able to sell more than I would look at being able to buy. How would I look at being able to get in on this one? Once again, same deal. Nothing changes, whether if it's an indice or whether if it's just a overall pair that you end up trading with each and every day for a Forex trading pair. I'll look for a counter trend line trade. Right now, 36.74 is the actual area where the market ends up rejecting this overall area to the downside. We're going to see further movement to the downside. So, a couple areas to pay attention to. It falls and it rejects off of 37.62. If it does not hold from 36.60, what you'll really be able to see is a fall all the way down to 36.35 first. If it doesn't fall in that area, then after that, it's going to fall all the way down to 35.80, which is basically the areas that we just talked about. That will literally be the support resistance, support area where the market fell down to at the beginning. So there'll be something that I really pay attention to. If the market stays up and continues to move toward the upside, then after that, we have to break the highs of 37.12 before moving up to 37.60 for that overall movement. Are we seeing the same thing when it comes down to the movement from the XPX 500 and US 30? Essentially, we are. It just means that this one is actually happening a little bit slower. There goes your triangle right here. We can see the dwindling volume actually starting to happen at this particular point. So ascending triangle, look for a drop to the downside and be able to go from there. Last one, last trading pair of the day. Let's look at NAS 100. NAS 100 has basically proven my point for the movement that we just talked about long term. And this one had a little bit more of a retest, but it could not prove and it could not break out of that overall position. We have that same W style of movement where the market ended up hitting a low, hitting a high, then hitting a low again, then slingshotting. This happened because of the election. This one was literally on the election day, popped all the way back up to 12,670. From there, the market ended up having a strong move to the downside. We had a retest right here. The market is still in the sell zone. What would I look for being able to get in on this overall pair? We're looking for 2-hour sales. We can be able to get into it. 2-hour high prices will end up being the best thing to be able to look for this overall position. Currently, right now, if we look at this overall movement, we had that huge breakdown yesterday. And the reason why we had that breakdown was because of stimulus talks, right? Everything is correlated. So nothing changes when it comes down to that overall movement. I will look for the movement to the downside, and then after that, if we can be able to get a 2-hour break on this overall movement, then after that, I'll look at being able to sell at least down to where support actually is. So here's our movement right here. Going into Friday, what would I want to be able to look for? I want to be able to see if this market is going to end up maintaining to try to see if it can break above 12,500. If it's not able to break 12,500, then that means that we're going to see that this market will fall down, and it's going to fall down rapidly. As it falls down rapidly, where's the areas where it could fall down to? 12,127 as one position, and then after that, we'll look at this market falling all the way back down to the overall lows at basically 12,000 for a position. So I do like being able to sell on this overall. What I would wait for, once again, is a high price. You get a high price into the sell zone, then after that, you can be able to trade it down and trade it with confidence, placing your stop just above the overall swing high at 12,674. Okay, so that's it. We actually end up going through. all of the pairs. We actually did it in 33 minutes. If you have any questions, or if you like what we end up doing, please make sure that you end up liking the Carter Capital business page. Please make sure that you go to Trade with Travis on YouTube and subscribe to Trade with Travis on YouTube. Also, go to our Instagram page, Carter Capital Trading, and be able to hop in with us as we be able to place in new information. If you are interested in being able to learn a research-based type of trading style and being able to get in and be able to focus, be able to have a community of traders to be able to help trade with you, be able to learn how to be able to do this automated trading wise, which means that, quite frankly, you're not necessarily doing all the heavy work. You end up having an automation system to basically be able to trade for you and be able to make money while you're actually working. So you're making money while you're making money, which is always a good thing to be able to do. If you're interested in being able to do that, please make sure that you end up hopping inside of one of our boot camps, or go to our next free webinar that we end up having. All you have to do is just go to the link right here, cartercapital.com/start here for the free webinar. If you end up hopping inside of our boot camp and going and being our next members in our overall boot camp, our 5-day long boot camp, you're actually going to end up getting a discount on some of the EAs that we have. And also, you end up having an opportunity to be able to get one free EA as a gift from us, saying basically Merry Christmas and obviously a Happy New Year going into everything else. I'm going to say this now, after the 20th, we will not be doing any type of sessions until going into the new year. The reason why we're doing that, obviously, I want to be able to spend a little bit more time with my family and be able to take care of the stuff that we have to do around there. and the market will end up being slow. So that give us a chance to be able to focus in on some other stuff. So make sure that you end up taking advantage of this overall opportunity. There may end up being lockdowns. There may end up being things like that. As long as you're getting a research-based type of trading style, learning a college-style system when it comes down to education. I mean, when it comes down to learning how to trade in the Forex market, overall, it's going to end up paying off. Like always, plan your trade, trade your plan. I see each and every one of y'all tomorrow. Take it easy.